Simon Ree, founder at Powell of Trading, joins us for more on this. Simon, CPI, a key driver this week. How is it likely to move markets, you think, and other market movers you're looking out for this week?
Sure. Well, CPI is the big one. Certainly, the street is looking for pretty much more of the same. If we look at what happened last month, we had CPI month on month at 0.3%. And we've seen a reacceleration. We had a few prints month on month of 0.1, 0.1. It rose to 0.2. It rose last month to 0.3. And so far, the lowest year-on-year inflation print we've had was in June 2023. So if we still see a reacceleration in the month-on-month CPI data, it's going to make it, I think, uncomfortable for the Fed to cut. Powell, I think, has been right to not cut in March. Question mark over whether May is a live meeting. And if the inflation data continues to show a reacceleration, I think it really does put the Fed in an uncomfortable spot. And I think equity markets would be disappointed by that.
Indeed, I think they're really feeling some of the discomfort, in particular the S&P 500 has been quite strong so far this year, but has it come too far and too fast? And how, this projected unfavorable inflation reading could burst that bubble, perhaps unwind all the gains, because there is already expectation that this inflation report could come in hotter than expected.
Look, I think so long as we've got a resilient economy and a dovish Fed, these are two bullish macro tailwinds. But if we start to transition to a situation where the market is no longer convinced the Fed's going to ease, and hang on a minute, what if they actually have to start hiking rates again? That does change the macro backdrop somewhat. Now, we're not there yet. The Fed is still certainly talking about rate cuts. We've still got 3 cuts in the dot plot. But if we do see some changes to that, we could see, like I said, some disappointment. The market has got off to a tremendous start, but as you noted, it's largely due to the AI bubble. And if you're looking at attributing market performance, it's all Nvidia, really. Nvidia really is kind of setting the tone for sentiment. And of course, Nvidia stock had a pretty sharp turnaround on Friday, so that could be a warning of things to come.
Yeah, indeed. So focusing a little bit more on Nvidia, as you talked about, pretty strong year so far, but crashed about 5% on Friday. What is going to happen to that stock now? Because there's also been talk about, that correction, that busting of the bubble. Is this it, or is this just a temporary blip? And when we talk about S&P 500 and those names in the S&P 500, where to go long on, you think?
Well, the sectors that have been performing have been obviously semiconductors, tech, financials, to a lesser extent industrials. And I think that in a market environment that we're in, it's the sectors that have got the momentum that will likely continue to perform. If you look at the underperforming sectors like utilities and real estate, they tend to be very defensive. There's really no momentum in those sectors at all. But I think it's important that investors understand the game they're playing here. It's very hard to argue that any of the leading sectors are cheap or offer great value. That's not to say that they can't get more expensive, but this is a momentum-driven market. It's very much a momentum game. Nobody's kind of really picking great value here.
And before we go, Simon, just a quick one on other market risks you're watching out for this week.
Look, I think this week's CPI is the big one. We have PPI as well, which in theory should lead CPI, but the market doesn't seem to pay nearly as much attention to that one. Look, I think that the bigger risk, though, is if the Fed does cut rates into an overheating economy. I think that would be worse than the Fed just sitting on their hands for a little while longer. If the Fed sits on their hands, we may see some short-term disappointment from the market, but if the job isn't done on inflation and we do continue to see a reacceleration and the Fed cut in that environment, they may end up having to raise policy rates much, much higher than they are currently. So I see that as one of the key risks for 2024.
All right, Simon. I appreciate your time. Simon Ree there, founder at Powell Trading.
My pleasure.